So Ritika started her journey by being a CA, and she has done her MBA from IIM Lucknow 2 years back. And she's an analyst at International Finance Corporation. So Ritika would love for you to get started about your work and introduce about how did you get into finance, how did you become passionate about finance, and what is the current role that looks like. And I'm opening the Q&A, guys. Feel free to put in your Q&A anytime, and we would like to take it up.
Sure. So I'll start like the beginning of my finance journey essentially was when I started doing my CA. And as a part of my CA curriculum, I had to do my articleship for 3 years. And that's when, when I was working in internal audit in during my CA curriculum, that's when I started getting interested in finance. So post qualification, the kind of roles that I was getting were more towards audit and tax at that time. And I had a passion towards finance based on my experience. And that's why I decided to pursue an MBA. And when I started doing my MBA, it was, you start your MBA in 3 months in, you have your summer internship program. And Deutsche Bank was one of the companies that had come for our summer internship. They were offering an investment banking role. And I think that was when it started for me in finance. I had done my 2 month internship with Deutsche Bank in their investment banking division for NRG sector. And the 2 months that I learned there, and the way that they teach you how to analyze a business, I think that's what got me interested about finance. Eventually, after my MBA, I did join Deutsche Bank. I worked with them for about 10 months in investment banking. And post that, I've moved to IFC, where I'm working in private equity. So it's more of a move from sell side to buy side. So I have an experience in both the arenas of investment banking and private equity.
All right, thank you so much for your introduction. So, how does your day to day work look like? What are some interesting projects, roles, and responsibilities that you work at? If you would give a glimpse about that, I think participants would be more aware and they would be
Sure.
able to ask questions about that.
Sure. So, how any private equity firm works is I'll start with that. You have your portfolio clients that you have already invested in, and you have new business clients, which are the projects that you are looking to invest in. So, your day to day responsibility as an analyst level, it will look like a mix of both. You have your portfolio clients. So, for example, I was handling 5 to 6 portfolio clients. So, on a day to day basis at IFC, at least, they give you a complete control over your portfolio client. So you are dealing directly with senior management of the company, looking at it from your, so if say they come up with a quarterly result, you are looking at how the company is performing versus how you thought they were going to perform, monitoring the company's performance that is in your portfolio, and new business. So new business is basically any new investment that you're looking at. So you work on 2 to 3 deals simultaneously. One of the most exciting deal for me that I had worked on recently was Grasim. So Grasim has recently launched Birla Opus, which is their paints division. So how that looks like is you have an investment committee meeting. So that is how I think most private equities work. So they have the IC meeting in which the board decides whether to go ahead with the investment or no. So before the IC meeting, you have your financial modeling, preparing the business plan. So the business plan, primarily you sit with the company, understand their business, model it out, and then you make a decision based on their numbers and your understanding of their business, whether to go ahead with that or no. So for an analyst, I think it is more on the skills that are required, or the day to day that you do is primarily understanding the business of the company, how they are running. So analyzing the annual report, going through like the past 5 years annual report, understanding how they have been functioning up until this point. Now, when a company comes to a private equity to raise funds, it's always for a particular project. So, for example, in terms of Grasim, if I explain to you, it was for establishing 6 plants in India for their paint manufacturing. So they wanted to raise a certain amount of money for that. Now you have to see what is the feasibility of that business. So Grasim in itself has multiple other businesses. when you are putting in money for a particular business, you understand how this business is going to work in the future. So that's what you model out. And in terms of modeling, I can get into the depth of it right now, but on an overview, you understand, the overall market of the industry that you're looking at, then the market share of the player that you're looking at, and then you understand, if how the industry is growing, how the player will grow in line with that industry, and then you make your no investment decision. So for IFC, post your, say you have green light for your investment decision. Post that, the deal life cycle goes on for about 3 to 4 months on an average. And post your investment decision, you sit with the client, you have your term sheet negotiation, wherein you finalize your, say, for example, if you're doing debt, then the terms of your debt, whether it's a fixed rate or a floating rate, what is the tenor of the debt. So all of that, your legalities will go in for post your investment decision. And finally, you have your closing. And in IFC, and I think most of private equity firms have started doing green impact investment now. So then you also look at that, wherein how much development impact is, your investment is leading to, in terms of employment generation, in terms of, say, water usage reduction. So in that sense, I think it's a complete life cycle. If I was able to explain it, where you're looking at it from the complete market perspective, right into the point where you're investing the money. So when you're finally, your last stage of the deal is the signing of the deal, the day that you're disbursing the money to the client. So it starts from understanding their strategy of why they want to go to it, and becoming a partner with them into, the investment. And then,
Thank
so once, say, we have gone through with the investment now moves to portfolio. So now the monitoring of this investment for the next, say, if it's a 5 year debt, goes to the portfolio. So that's how portfolio and investment works in tandem with each other.
So it is about what you had mentioned earlier about your project. So the question is, since Grasim is an already listed company, did Grasim offer equity or did they raise debt? And how would IFC make money on the deal? Would it be commission on the debt amount or equity?
So, like we had done debt with Grasim. The scale of Grasim is such, which is correctly mentioned, that, an equity deal would be an even bigger deal. But we had raised debt for them to finance their paint manufacturing, particularly. And how IFC makes money is, basically, you have your interest rates, right? You have the rate that you're offering. So how you structure an interest rate is, like Grasim, for example, is a AAA rated company, the credit rating of the company. So for a AAA rated company, you take what the market rate is for such a company. And then IFC adds a certain amount of spread to it, which is IFC spread. So that spread on the interest rate is what IFC is earning from that deal. And yeah, you do have like a certain percentage of a front end fee that you're taking for your services. So there is a proper fee structure. If I don't know if I should get into the depth of it, but yeah, majorly I think it is about the credit spread that you have over and above the market rate that the company gets in the open market to raise money. So it completely depends. Like, like for example, Grasim is AAA rated. If I go for a company which is AA rated or A minus, the interest rate will significantly differ. And the spread that I take will also differ. So for a company where I am taking in more risk, I will ask for a bigger spread, because I am at a risk in a greenfield project. If the project does not go through, and if the company, goes down, then I need a bigger hedge for myself. So it completely depends on the credit rating and the size of the company. That's how a private equity firm will make money on a debt deal.
So the next question is, what are the skills required for front end investment banking role apart from MBA qualification? What do you think are the skills which are needed to do well in the role?
So I think two things that really helped me was, one, I think the most important skill is financial modeling. Your financial modeling skills have to be extremely strong, because that is what you're going to be doing on a day-to-day basis. And the second important skill, which I think I would give 30% weightage to, would be understanding the global economy as a whole. So when, for example, I was looking at a deal in green steel making, you have to have an understanding of how the landscape in that industry is changing, how the global politics, the geopolitics are affecting that industry currently. So a lot of, the steel making industries were in China, and after COVID that landscape is shifting. So you have and most of, how steel making is carbon heavy. Now globally the landscape is changing towards climate financing and uh, reducing your carbon footprint. So being aware of how your global factors, your geopolitics, your macroeconomics affect the transaction that you're working on, I think that is also a very important skill in terms, along with your modeling skills. Your modeling skills are something um, that, eventually you will be able to do it very easily. But the 30% of geopolitics that, or the macroeconomic environment, that's ever changing. So you have to keep up, and you have to have a good grasp and interest towards that side as well.
The next question is, what kind of roles, whether it is in finance or consulting, can help you develop a business instinct in case one aspires to build their own business?
Oh, that's an interesting one. So I think what kind of roles, right? Or
Yes.
what kind of roles? So, this is something that I also personally wanted to do. So, which is why I really like this question, which is why, so from my personal perspective, I'll explain this. So, when I was working in investment banking is very modeling heavy, right? And that's when I switched to buy side. So when you work in buy side, you are analyzing, you are working from strategy and finance. You're combining the both. So when you're looking, like for example, in the Grasim deal, it is a greenfield project that they were going for. Birla has never entered into the paints market now, and they are very well to do in terms of what they are existingly doing. Now, what is the need to suddenly disrupt, get 1,000 crore investment, take that much debt, and enter into the paints business? So the entrepreneurship mindset that a private equity job helps you develop, because you have to think about it, right? Why are they doing this? And that's when you will be able to understand why are you making the financial model for them. So for me personally, this has helped a lot. Plus the exposure when you're actually directly sitting with the CFO, the CEO, the CEO of the company, and understanding their vision. Now, this was in terms of Grasim. I'll explain to you in terms of a very small company where we gave an equity deal. And it's an MSME company that we were working in with to give them 20% equity, and the promoter of the company had come in. So when the promoter explains their business to you, their future vision and plans, the way that they look at the market. So, for example, how it helped me personally was it helped me structure my thoughts in a way that when, say, I'm looking to go into the EV space, like right now, all the two-wheelers are moving from your ICE engine to your EV engine. So when you're looking at the EV engine, you will first look about the subsidies. When will the subsidies expire? Some were said to expire this year. So you will look at the market as a whole. Then you will see how many other players are there in the market. Now, in terms of the other players, what is your market share? How can you brand or compete with the other players to increase your market share over time? So all this is what you get to learn in private equity, which I think are key entrepreneur skills. This is your business strategy. This is what I love about private equity, even venture capital. Venture capital is more, so the difference between the two is we work with a little bit of more mature stage companies. Venture capital is seed funding, right? Those are even more, so those fields are exciting when you want to look at it from both perspectives over a business strategy, and then you're logically incorporating finance into it and building it out. So that has significantly helped me a lot, and it excites me far more because you're interacting with an entrepreneur who's been in the business for 40 years. You're understanding things, essentially learning from them. So for me, that has been a great experience personally.
Any advice you have for freshers who are going to start into early stages of their finance careers? Any advice from your own experience that you believe could help them do well in their careers?
So a couple of things that helped me is you need to understand like the why of things. So anybody with basic knowledge of finance will understand a profit and loss statement. revenue minus fixed cost minus variable cost, you come down to your profit, right? But understanding why EBITDA is used as a metric, why not net profit? Those questions, like understanding why is accounting the way it is important. So understanding the why of everything. Secondly, keeping in touch with global macroeconomics. I think that really helped me a lot. So, for example, if the US repo rate is now changing, how that will push up the inflation. Now, if US inflation is going up, what impact will it have globally? Once you start understanding this, like not only reading it up, I can also read it up like, okay, the rate is unchanged today. But why, how? Now, once it's unchanged, how will that impact my global trade? Reading up on the curiosity of reading up on that and understanding that, that really helps. And third is financial modeling. Like there are a lot of courses, like I'd said, Ashwath Damodaran's course on YouTube, which is completely free. So you, and it's very, very well explained. So you can in your free time also look at that. All these things holistically help you when you are interviewing for a finance job. And fourth most important is you have to read up on all the different careers that finance has to offer, and see what your forte is and what your interest is. Because it is all about, when you are working 12 hours a day, if it really does not excite you after a point, it becomes draggy. So you have to be really driven by it. And say, for example, equity research, that is what the stock markets, how a stock of a company is moving, whether you should buy, sell, hold. If that's what really drives you, then that is the career for you. But looking at, provide raising funds for companies, growth stage companies, if that's what excites you, then VC is a career for you. So analyzing and then structuredly applying for the field that you want, I think that really helps you not get stuck in the rut.
Thanks, Ritika. So, one or two last questions that we'd like to take
Sure.
up before we end the session. So, one is, do you advise somebody to do a CFA post MBA in finance?
um should help, depends on the background, honestly. So for
And they
me,
do a computer science
yeah,
graduation.
I think it would help. So like I had previously also mentioned, MBA in finance will provide you with a mix of everything. Like it will give you 5 courses on valuation. But what a CFA degree does is it's a 3-level program completely focused on. So in terms of jobs, I don't know how much it will help. Like I don't know if it will actually add value because your MBA in finance is already a heavy degree. But in terms of personal technical knowledge, I think it should definitely help for somebody who's come from an engineering background. In terms of just learning more about finance, a CFA degree will definitely be an add-on.
All right, thanks. We'll take one last question. So, what are the major differences between buy side and sell side? And is buy side more diligence heavy?
Buy side is more diligence heavy in terms of heavy as in it is a mix of everything. So there is a diligence if you're doing an equity deal, when you're actually giving your own money to a company, you will obviously do more of diligence on their suppliers, the customers. Now today I can come and say I have 20 customers. I actually have to go and vet, right? If this company has that many, if I am giving that much fund, if I am becoming a partner to the company. So in that sense, it is a little more diligence heavy because it's your own money at stake. So you will go in more depth to understand if the business is solid. And so the key difference between buy side and sell side is the raising of the funds. Here you are putting in your own money in buy side, and in sell side you are helping the company either amalgamate, merge, raise funds, IPO, so or LBO, leverage buyout. So all those services that you're providing, you are not putting in your own money. That is your sell side. In buy side, you're putting in your own money. So obviously, when you're putting your own money, there is a little more diligence involved. That there is a higher stake at it. So, but I wouldn't say like, that is what 50% of it is. That would be 10 to 15% of it. 85% is your business and finance side of things.
All right, thanks, Ritika. So, I would like to thank all the participants also today for attending, and thank you so much, Ritika. Very beautifully put. I think I was very attuned to throughout the conversation, and from the number of questions that we are getting, I understand like people really loved the way you structured each answer and provided very helpful, valuable knowledge. Guys, do check out Ashwada Modran's courses. Try to read up about global macroeconomics and note on all the points that Ritika had mentioned. I think it was really one of the most wonderful sessions in finance, especially a complex subject like finance. You have made so many people, I think, passionate about it, and then given a real value add to how to think about the career, especially when you mention you should be passionate, because if you're putting in 10, 12 hours, right, you can't drag
Yeah.
on for long. So it was very inspiring. Thanks a lot, Ritika, for your time. It was very, very insightful. And thanks to participants for asking such engaging, wonderful
Yeah.
questions.
That was really great. Thank you so much.